Chapter 10, closing entries and post-closing trial balances. Those are the last two steps of our accounting cycle, so we're getting close to the end. After this chapter, you will complete a mini practice, and then we'll cover chapter 11. It's not part of the accounting cycle, but it runs parallel to the accounting cycle, and it's something that you need to know. So we will be doing some activities out of that. I'm not going to be using a PowerPoint this time. I would encourage you to get some scrap paper and a pen or a pencil, and we're going to work through the whole process. We're going to try to visualize what the closing entries might look like, and then once we feel comfortable with that, we'll move on to the post-closing trial balance. What I have up here are some T accounts with some balances in them, as they might appear at the end of an accounting cycle. I have my capital with 10,000, and then I have these 5 accounts, which are temporary accounts. If you recall, temporary accounts are those accounts that need to be closed out at the end of the accounting cycle. They're the accounts that originally affected capital and we pulled them out temporarily. Well, we're at the end of the accounting cycle, so we're going to create some journal entries that will put all of those values back into capital and then allow us to close these out so they're zero. We finally get to use income summary. We're going to use it for 3 transactions, that's it. I'm going to move over to the overhead and talk a little bit about what a closing entry is, what it might look like, the process that you would go through, and then we'll work through this particular problem. If you look on page 263 of your textbook, you see some examples of closing entries. Notice that it's in your journal. This one happens to start at the top of the page, but it could actually start midway down, depending on where you left off on your journal. Notice that they are unusual transactions, so we're going to use closing entries. And notice that these transactions don't have source documents. And the reason we don't have source documents is this little description up there, closing entries, says that we're getting our information from our general ledger and not necessarily from another source document. There is a particular order that we're going to follow. Notice that I am dealing with my revenue here, my expenses here, and then I'm going to be closing income summary, and then I'm going to worry about withdrawals. Now there is a neat little way to remember that order. We're going to come back to this illustration later, but just know that this is kind of what it looks like. Notice it's at the last of the accounting cycle, so all 4 of them are dated with the same number, or the same date. The acronym you're going to use is SEND. Whoops. Because we are going to send our temporary accounts back to capital. The S is going to represent sales, or our revenue, how we generate our revenue. The E is going to represent expenses. The N is going to be net income or loss, and you're going to find that in your income summary. Boy, I really should go out a little bit so you can see what's going on. And the last D is going to be your drawing account. That's an abbreviated way to say withdrawal account. If you want to put a W in there, that's fine. But this is the order in which we're going to close our accounts and bring everything back to 0 and then modify capital. I'm going to put this at the top so we can top of this illustration so we can kind of remember the order. And we're going to visualize what's going to happen once we write our transactions. So you wouldn't normally post things to the T accounts or to the actual general ledger accounts, but this is going to help us visualize it. You also wouldn't want to use a green or a red or a different colored pen besides blue or black, but just so you know what's going on, I'm going to go ahead and use a green one. The first thing that we're going to close is our S, or the sales. What would it take to make revenue 0? If I have a $2,000 balance and I want my balance to be 0, what would I need to record in revenue? You'd need to record a $2,000 debit. And when you do that, your balance then will be 0. But you should know by now that with every transaction there's a debit and a credit. We need a place to put this $2,000 on the credit side. Now some of you may be thinking, let's put it into capital. Well, yes, we could do that, but what we want capital to reflect is really the net income or the net loss, not necessarily our revenue and expenses. So we're going to temporarily put it down here into income summary. Income summary is like a little mini income statement. Remember from last chapter, we created an income statement and it listed all the revenue and all the expenses, and when they were compared, we ended up with just our net income or our net loss. I'm going to label those as our first transaction. The second transaction is our E, or the expenses. Now I have 2 expenses and I can close them at the same time. What would it take to close utilities expense so it would have a 0 balance? Well, it would take a credit of $1,000. And when that happens, our balance in utilities expense goes to 0. The same would happen on rent expense, only we would do it for $500. We'd have a credit of $500, and our balance then would be 0. But once again, whenever we have a credit, we need to have a debit. And because we're putting these 2 together into one transaction, we can also combine the 2 debits, or 2 credits into one debit. So if we added these together, we'd have $1,500, and we would have to create a debit somewhere. We're going to put it back into income summary as well, because in income summary we're comparing our revenue to our expenses. So I'm going to put $1,500 in the income summary. This is transaction 2. And we have now closed our revenue and our expenses. Now our next one is N, the net income or net loss, or the income summary. This is where we see a reflection of our net income or net loss. If I put my revenue here, I'm going to put an R there, and I put my expenses here, did we make a net income or a net loss? We made a net income. Now, I'm going to have to record something on one side, a debit or credit side, in order to balance that account out. What side do you think I would record it on? The debit side. And how much would I record? Well, $500. It would take $500 on the debit side to make this balance. And when I do that, I now have a balance of 0. Now, I put my balance on the credit this time because I started out with a larger amount on the credit side. But if you recall, income summary does not have a normal balance. If my expenses happen to be more than my revenue, I would have had a larger amount over here, and that would have been where my bigger balance was, and I would have put the matching amount over on the credit side to balance it out. All right, so number 3, I put a debit of $500, and I know that's my net income. Where are we going to record the credit for this transaction? Now is when we're going to record it into capital. Remember, I didn't want revenue and expenses. I only wanted a net income or a net loss. Now that I have my net income, I can put it in there. Net income is going to make my capital go up on the credit side. I now have my net income or net loss or income summary closed. Now the last thing I'm going to close is withdrawals. Withdrawals has nothing to do with income, so it's going to have nothing to do with income summary, but it has everything to do with the owner's capital. If I wanted to close withdrawals, what would I need to do? Well, I would record $1,000 on the credit side. With every transaction, there has to be a debit and a credit. Where am I going to record the debit? I'm going to record it on the debit side of capital, because withdrawals are going to make capital go down. My balance in withdrawals is now 0. My capital has changed. My capital is increased by $500 to $10,500, and it's decreased by another $1,000. So my balance now is $9,500. When you complete your closing entries, all of the temporary accounts will end up with a 0 balance, and the capital account will just simply have a changed balance. All of the other accounts, all of your assets, all of your liabilities, they will remain the same. Nothing will be changed. Now, as I mentioned, we're not going to record them first into the accounts. We always start with journal entries. So I'm actually going to go through this process again and show you what the journal entries would look like before we posted them. We're going to pretend that this is my journal over here, and I'm going to write closing entries at the top. I'll date it, and we'll just say it's September, January, February, March, April, May, June, July, August, September 30th. Always have to think. Now let's look at our first transaction. I recorded a debit on the revenue and a credit in income summary. So I would write revenue, 2,000, and income summary, I'm gonna have to abbreviate a little bit here, 2,000. My next transaction also happens on the 30th. I've done my sales now. My expenses were debited on the income summary and credited on the 2 expenses. So I'm going to list both of the expenses. We'll start with our debit. Income summary of $1,500. And our 2 credits, we'd start with utilities expense, 1,000. And rent expense, 500. That was the journal entry for expenses. Now, income summary, it's easy for us to tell right now. It's not as easy to tell when you're writing the journal entries, because you won't have done this yet. But on our illustration here, we know that we had a debit of 500 in the income summary and a credit of 500 in the capital. So I would record income summary, 500, capital, 500. Notice up here, this is going to be a kind of a way for you to figure this out without having to do the T account. Notice how I have 1,500 on the debit and 2,000 on the credit, and I needed that to determine what my new debit was going to be. If you take a look at these 2 income summaries, let me get a highlighter here real quick. I've got one income summary here and one income summary here. Oops, not doing very well here, but we're just going to go with it. I could create an imaginary T account, and it is the same as what I have down here in income summary. Now I can just look up here and say, oh, well, in order to make income summary close, I'm going to need a debit of 500. So I'm going to put it here. Now keep in mind, over here, if expenses were bigger than revenue, I'd have to actually put an entry on the credit side and a debit entry on capital. And that would have been, this would have been reversed for a net loss. If it's a net income, this is the order in which it would be. All right, our last transaction then. Number 4, we were closing withdrawals on the credit and debiting capital. So we start with our capital of 1,000 and withdrawals, we're going to credit for 1,000. You have just completed the 4 closing entries. Now remember, this is what you would do first. You would record these transactions. Then you would take them and you would post them over to the accounts. We just did the posting first so you could visualize it, but normally you would write this first and then you would transfer from revenue, put 2,000 on the debit. Income summary, put 2,000 on the credit. We'll practice posting in just a little bit. You should have your book and workbook opened at problem 10.6. We're going to be using this portion of this worksheet to prepare our closing entries for December 31st. We're doing it for Kits and Pups Grooming. You're going to want to have that available to you. I probably won't be referencing it much, so make sure that you're looking back and forth. In your workbook, you'll be on page 188, and we're going to work through this assignment. It looks like in the instructions that we're supposed to start our closing entries on page 11, so we mark that page 11. And as I said before, sometimes closing entries start at the top of the page. It's possible they might start in the middle of the page. Since we don't have any other transactions, we're going to go ahead and start at the top of the page. Since it's at the top, we'll start with our year. And it says it was for the month of December 31st, so our first closing entry is going to start on December 31st. We're going to want to label it Closing Entries. It's going to take the place of our source documents and be a clue that they got the information from the general ledger. Remember, our worksheet is a reflection of the general ledger. So I'm going to put my SEND acronym up here once again. If you recall, S stands for sales or revenue. So we're going to close our revenue. If you go back to your book, you should note that you have 2 revenues, one for boarding revenue and one for grooming revenue. They are both credits. What would it take to close them? If I have a credit balance, I'm going to need to close them with a debit balance. So I'm going to list both of those revenues in the order they appear. We'll say boarding revenue. To close that one, we would have to record a debit of 20,000. And the other one is grooming revenue. And to close that one, we would need to record a debit of 8,000. Where do I put this money that was just taken out of revenue? We're going to put it temporarily into income summary. So I'm going to record 28,000 into income summary. Close that up so you can see it a little better. So we've closed our sales. The next one we're going to close is our expenses. If you go back to your workbook or your textbook, you'll see we have 5 expenses, starting with advertising. They have a debit balance. What would it take to close them? It would take a credit entry in each of them. We know we start with debit entries, so what would be debited in this account, in this situation? If we're closing expenses in credit, we're going to put the total amount of the expenses into income summary. So I'm just going to write income summary here for now. I know eventually I'm going to debit it for an amount, but I'm not sure what that amount is yet. going to list all of my expenses. I start with advertising expense. Equipment repair. And maintenance. Rent expense. Oops. And utilities expense. And then I would record what was normally a debit balance as a credit entry next to each one of them. Now all I have to do is add up my expenses to find the total that will be put as a debit into income summary. You can add them up, but you can also look on your, oops, they don't have the total on there, so we'll have to do the adding here. We have 0, 0, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 29. 0, 0, bring a 2 up there, 4,900. Oh, I hope that's right. Now we're going to calculate, or now we're going to close our net income. I'm going to highlight it once again so you get a feel for how this is. We're going to close our income summary. Right now, I have 28,000 in my income summary on the credit side, and 4,900 on the debit side. I'll do a little calculating down here. 28,000 minus 4,900. I have a net income, because there was more revenue than expenses, I have a net income of 23,100. That 23,100 needs to be put on the debit side of income summary in order to make these two sides balance. If I put 23,100 and add it to 4,900, it'll total 28,000. So I'm going to start with income summary. And close it for 23,100. Income summary wasn't open for very long. And where does that net income then get reported? It gets put into capital. So we have, who do we have for capital? Abe Schultz. Abe's capital just went up by $23,100. And the last one that we're going to close is the drawing, or the withdrawals account. If you look on the worksheet on page 273, you'll see that Abe Schultz withdrew $7,000. And that was recorded as a debit. If we want to close the withdrawals, we're going to have to credit it. If we're crediting withdrawals, what are we going to debit? We're going to debit capital, because capital is what's affected by withdrawals, and capital goes down on the debit side. And then we're going to credit our withdrawals. Those are your 4 closing entries. Now, has anything changed in our general ledger at this point? Would our general ledger say that our revenue has 0, and our expenses have 0, and our withdrawals have 0? No, we haven't done anything to the general ledger. We've just recorded our transactions. you would do like you've done with every other journal entry. You would go to boarding revenue, record 20,000. You'd have to put your post reference as to, well, you'd record 20,000 in there and calculate the new balance so that boarding revenue had 0. And then you'd come back here and you'd write the account number. We're going to practice that in just a minute. I need you to turn to the next page, 274 in your textbook. On page 274, we have closing entries that have been done for us. I'll zoom in just a little bit here. They already recorded closing of revenue and expenses and income summary and withdrawals. Now our job is to use our working papers to post the closing entries to the appropriate general ledger accounts, and then we're going to prepare a post-closing trial balance. A post-closing trial balance is the last thing that we're going to prepare. It's just our way of checking one last time to make sure that all of our accounts are in balance. Because it's in your textbook, please don't write the numbers. Just kind of think through the process of writing the numbers. But we're going to start posting these together, and then I'm going to have you do the rest on your own. So get your working papers out. You'll be on page 189 of your workbook, starting with cash and bank at the top. Now, in this particular assignment, they've given you all of the permanent accounts. In some of the other assignments that are coming up, they may not actually show you the ledger accounts for all of the permanent ones because they never get changed. Aside from capital, they never get changed. So you may have to go back to the worksheet or the list of balances in your instructions to find them. But we are actually not going to use anything on that first page or the second page. I'm going to zoom out here a little bit, because all of these are permanent accounts that are never affected by closing entries. You're going to focus your attention on page 191 and 192 of your workbook. The first transaction is guide service revenue, $16,300. So we're going to go to guide service revenue. We're going to write the 31st, right? December 31st. And because this is a kind of an unusual transaction, we're going to put a description. It's going to be closing entry. You have to make sure you put that in there. And we're going to say what page it comes from. Now, your book says 1. That seems silly. You wouldn't have closing entries on the first page of a general journal. So I actually changed mine to 12. And if you want to pretend like it's 12, you can. We got that from G12. And we had a debit entry of $16,300. Now when I compare that debit entry to my credit balance, what happens to my balance? It becomes 0. And then I would come back to my journal and I would write 401. Please don't do it. It makes it confusing for the next kid who uses this. But normally we'd write the number 401. On income summary, we'd have to start a new transaction or a new page because it's the first time we've used it. We'll have to put our year and December 31st. And once again, we'll write closing entry. We're getting it from page 12. And this is a credit of $16,300. Closing entries doesn't have a normal balance side, but right now I've got something in credit, so that is my balance, $16,300. And then I would come back here and I would write 310 next to income summary. I'm going to go through the next two and then I'm going to turn you loose. On this next transaction, we're going to start with income summary. So we have a new transaction on the 31st. Once again, we're going to write closing entry. G12. This time, however, it's a debit of $10,000. When I compare $16,300 credit to my $10,000 debit, I'm left with $6,300 in the credit. And then you would come back and write 310. And let's go to advertising expense. 31st, closing entry, G12, and this was for a credit of $3,000. When I compare my debit balance of $3,000 to my credit transaction of $3,000, I'm left with 0 in advertising expense. And then I would come back and I would write 501 in there. I'm going to stop the video. I want you to finish posting the rest of these, and we'll come back together and check our work. Let's check your work. Check the balance. First of all, check to make sure that you have the right number of entries in each one and that you have the correct balance. Wanting to capital, you should have ended up with $52,500. Wanting withdrawals, one transaction ended up with 0. Closing or income summary, you had 3 transactions and you ended up with 0. Guide service revenue, 1 transaction, 0. Advertising expense, 1 transaction, 0. Maintenance expense, 1 transaction, 0. Rent and utilities both had 1 transaction, ending up with 0. So that's how you post. The last thing that we're going to cover in chapter 10 is your post-closing trial balance. Turn to page 265 in your textbook. I'm going to zero in on this. Here's an example of a post-closing trial balance. We do this trial balance after we've done our 4 closing entries to make sure that everything is done correctly. Notice that it has our 3-line heading, who, what, and when. This time it's a post-closing trial balance, not just a trial balance. And we're using just the date. So the date on that last day of the accounting cycle, hopefully everything's balanced. We have all of our permanent accounts listed. You don't see any of our temporary accounts because if you've done it correctly, they should all be 0. So we list our permanent accounts and we go back to our ledger and we write in the balance that we have. And we're back to the debits and credits now. We write our debits, normal debit balances on this side, normal credit balances on this side. All of them should not have changed with the exception of capital. It should now be different. And hopefully it's different enough to make these 2 balance. So using the assignment that we just completed, problem 10-7, we're going to be using all 4 pages of the general ledger. Starting with, there it is. Starting with cash. And we're going to reference all of these balances. And the capital. These are all 0, so we won't use those. Use the form at the bottom of page 192, and we're going to work through this together. And let me look at the instructions. Who is this for? Goodness gracious. Bear with me. Bear with me. I know you've had to suffer through all of these all term long, and you're still doing it. This is for Outback Guide Service. So the who is Outback Guide Service. Found that from the instructions. This is a post-closing trial balance. And we are preparing it on December 31st because that's when we recorded our closing entries. Now I'm just simply going to work my way through all of the accounts starting on page 189. I'm going to start with cash and bank. I'll record, you can put the numbers here if you want to, 101, cash and bank. Oops. $12,000. And then the next one is accounts receivable Mary Johnson. $600. You're going to continue through all of these until you get down to capital. I'm going to stop the video for a moment and let you record those. Let's check your work. Your post-closing trial balance should look similar to this. Notice I made a mistake. Mistakes happen. If you correct them the right way, it's not a big deal. I put the accounts payable balance as a debit, and it really should have been a credit. But you should have stopped with capital and not gone any further than that. The very last thing that we're going to do in this accounting cycle is we're going to total them. Draw a single rule because we're ready to add. Get your calculators out and add them. You might want to stop the video while you do that. If you wrote them correctly, you should end up with $79,500. If you don't, you have to find your error. If you do, double rule and you are done with the entire accounting cycle. At this point, you will just complete the assignments as they are outlined in Moodle.